Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic is a popular one. It's one you guys are want to stick around for. It's how to grow a small account. I know there's lots of people out there that want to get into the trading game, they want to get into the trading business, but maybe you don't have $25,000. Maybe you can't get over the pattern day trading rule, et cetera, and so forth. Maybe you only have $2,000, $5,000, $10,000, whatever amount of money you have. Today, we're going to talk about how you can get around that rule, as well as how you can trade with a smaller account and actually make money from it. Okay, now obviously when you're new, you still want to start small because otherwise you'll be featured on When Will the Insanity Stop? And you don't really ever want to be featured on an episode of that. But we're going to talk today how you can kind of stair-step that account, some of the patterns that might be more advantageous, some of the types of stocks, some of the price ranges, etc., and so forth. So it's a very good lecture for those of you out there that maybe don't have quite as much money as some of the other folks out there. And for those of you that do have larger accounts, it's still a very helpful lecture because you can take what we use for the small account and scale it with a larger account. All right, so if you like these videos, please click the like button, hammer, smash, crash that subscribe button. We'd really appreciate it. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how to grow a small account. All right, there's a lot of folks that want to get into the trading business. And to be truthful, anybody that gets into any business should be properly capitalized. That goes without saying, right? I mean, you shouldn't try to take $20 and turn it into $2 million. You should try to be properly capitalized and have a good business plan that will give you a fair chance of success, right? A lot of people have failed before they've ever started because, well, they don't have any money. But we are going to talk about, well, what if you fall into that category and you still want to be a trader, you still have a dream or a goal to do this? How can you still accomplish it? Is it still possible? And the answer is yes, it is still possible, but it's going to be more challenging than someone that comes in properly capitalized. Okay, the good news is when you're new, it doesn't make as big of a difference how large your account is, and we're going to talk about that today. So how to grow a small account. We'll talk about a couple patterns, but not too many patterns. We will look at quite a few chart slides, though. But before we do that, before we talk about how to grow a small account, what do we have to do first? What do we have to do? We got to talk about when will the insanity stop? When will the insanity stop? This week's is, I guess like every other week's, egregious. They're all egregious, just the levels of egregiousness, that's all. So this one is, I don't know what to say to these people at times, Lost $80,000 since the pandemic began. I'm down to my last $3,000 in my checking. That's checking account. Sounds like not trading account, right? Gonna take a break. Don't know where to start from here. I don't know if you want to use the word start from here, know where to go from here, perhaps. I messed up with $50,000 in options over 2 accounts and then $30,000 in Forex. So this person was properly capitalized. $80,000 is more than enough money to be a successful trader. And I specifically chose this particular When Will the Insanity Stop because it relates to today growing a small account, even though this person had a large account. No matter the size of your account, you have to respect that account. Whether you have $50 to your name or $50 million to your name, respect it. And if you don't believe me, ask Mike Tyson. How much did he earn in his career? What did they say? $300 million? Something like that? So $80,000 doesn't seem so bad in that respect. But the point is regardless of how much you have, if you don't protect it, it's going to walk away from you. That's what happens, when Don King charges in $9,000 for towels. But the point, though, is money management is everything. If you can't get your money right, you'll never be successful. If you don't take anything else out of today's lectures or any of my lectures, get that one. In life, not just in trading, in life, if you don't get your money right, you will never be successful. A little quick side note story, just a quick one. I won't take up too much time. I was at the McLaren dealership, I don't know, about 3 months ago now, okay, a little while back. And somebody was in there asking, they were asking about 12-year loans on a car. 12-year loans on a car because it was their dream to own a McLaren, but they didn't make that much money, and the only way it was possible is to divvy that payment out over 12 years. Well, we all have goals and dreams. That's okay. But how we go about getting those goals and dreams, this was just obviously an ego stroke or something. You're not there yet. You're not ready. And there's nothing wrong with that. That's not saying you're a failure. It just says you're not ready yet. The yet part is the key. Don't let your ego be upset by that. Just say, hey, that's still my goal. That's still my dream, but I'm not ready yet. You'll get there, though. But to do something that foolish with your money is ridiculous. It's absurd. Now, sure, people will comment and be like, oh, and they'll give me the one scenario where it's okay. And maybe there are a couple small scenarios where it's okay. This wasn't one of them. This was somebody that didn't have an income that should probably not buy a car like that. Maybe they should focus on retirement. Point, back to the original point. Get your money right. If you don't get your money right, you will never be successful. You will always be working for the man, chasing your tail. And when you work for the man, guess what? The man gets to dictate and tell you what to do, how to do it, when to do it, and how much you get paid to do it. Learn how to trade, learn how to take care of your money, and no one will ever be able to tell you that ever again. Ever. Ever. Right? Ever. So it's going to take hard work to get to that point. Put in the time and the effort. So I want to start off with this, okay? Yeah, well, it'd be a little different, Ollie. He was looking at like an 8-year-old, 7-year-old car, so the depreciation of it, you could have a 1962 $70 million 250 GTO Ferrari that costs you $100 a year, and it's a $70 million car. Why? Because it's 1962. You could buy a brand new, minivan for 40 grand, and it'll cost you $800. But anyway, so we're going to talk about some of the trades I took the last few days, and we're going to talk about some of the trades Unwall took the last few days, and there is a point to what I'm getting at. So just bear with me. There is a point, okay, to what I'm getting at, all right? So I think it was on yesterday. This is 2 days ago, okay? I took a double bottom retest here on Mara, right? A little buy setup right there. We ended up taking the actual retest on this. $52 was the entry. $51.30 was the stop. And you can see this was the call in the chat room. This is, the P&L for that. You can see it up here. Made a couple grand, made 2 to 1. That's a nice trade. It's a textbook trade. You could have taken the first buy setup at 52. You could have taken the retest, okay? At $52. Either one of those was a good trade, all right? And they gave us the result that we were looking for, that 2 to 1, right? You can see here $1.40 was 2 to 1, and that's what we got out of it, okay? The next trade on XPEV, and I believe Unwall took this as well, you had the initial trade right here, which was aggressive, and then you had the retest trade. And to be fair, to be honest, this one held like a hair in a biscuit. Right, we took the early aggressive trade and it went down to 44.24 on this bottoming tail, and our stop was at 44.20. This is why you should give your trades room, give your trades space, okay? And then boom, it triggered 44.60, 44.20. We ripped, made a couple grand on XPEV, took a 2-minute 3-bar play on NVDA right here, $231.25 by 2:30. This stopped us out, but I didn't put it on here. But the 84% play triggered in later in the day, much later in the day, and got our money back. I lost $1,070 on NVIDIA this day, and I actually got about $1,200 back. So NVIDIA actually ended up being a pretty good trade, right? Ended up making about 5R that day, something like that, 4R that day. I think it was 4.3R or something like that. So I ended up making like $4,300 on that. By the way, I went, to tie this into what I just said. You know how I just said if you work for somebody else, they get to decide what you get to do, how you get to do it, when you get to do it, how much you get paid for it? Nobody gets to decide that in trading but you, right? I ended up taking 1,400 shares of Mara, but there's nothing to say that you couldn't have taken 3,000 shares of Mara or 5,000 shares of Mara or 10,000 shares of Mara and made 2, 3, 4, 5 times more money, right? I mean, the average American family makes 60-some grand a year in this country, and sometimes we can make $3,000 or $4,000 or $5,000 in one day in trading. Now, will you get there tomorrow? Of course not. It's going to take you time to get there, right? Here's another example of a trade we took. This was yesterday, actually. This was the only trade I took yesterday. Billy had a little bit of a gap down, all right? We had a little bit of it I would say a semi-sloppy 5-minute 3-bar play. But if you look at the 2-minute, what was the sell on the 2-minute here? This bull sandwich, this wide range red engulfing bar. See the difference by looking at different time frames, guys? So if you look at the 5, you're going, okay, it is a 3-bar play. Not perfect. It's not perfect, but it is a little sloppy. Look at this doji bar. I'm a little concerned about the doji bar. Who's really winning here? Are the buyers winning? Are the sellers winning? Who's really winning? Well, if we drill down, we can actually see this is much better than we thought. So if I had just looked at the 5, I'm looking at it going, okay, it's decent, but there's some issues here. And the doji bar smack dead in the middle at 80 on the first 5-minute bar is a concern for me. But when I drill down to the 2-minute multiple time frame analysis, wow, I have a green bar that got completely engulfed. And the best part is after that wide range green bar, we had a couple little narrow range bars. Why is that important? Because it gives us a much more reasonable stop loss. So if we didn't get these narrow range bars, we would get in at 79.50 and our stop would be 80.50 and we'd have a $1 stop loss, which is, it's okay. It's not the end of the world. It ended up going more than 2R even with a $1 stop loss. But with this topping tail, oh my goodness. So we get in right here at 79.45, stops 80.01, and this thing was beautiful. I mean, it went down to like $75 yesterday. It went 4, 5, 6R. I don't remember exactly, but it was a lot. All right. Made another couple $1,000s on Billy. All right. And then one more, and then we'll get into some unmulls trades. Here's a trade on Tesla, right? That was taken a few days back. All right. Here is a 1-minute 3-bar play. So you have this wide range green bar followed by a red bar with a bottoming tail. And then this. So this is a bit of a sloppy, right? A bit of a sloppy little 3-bar play. It triggers, just about stops out depending on where your stop was, and then gets sloppy and then ripped, right? And we've all seen Tesla the last few days. Gosh, since this chart, which is less than a week ago, I mean, Tesla's at like 1,050 or whatever the heck it's at. All right. Possible add on this ascending triangle right here over 902, 903, something like that. And then it rips higher. And again, another couple $1,000s here. So trust me, I'm getting to something here. Okay. There's a point, not just talking about the charts, not just talking about good patterns. There's a method to my madness here. Okay. And here it is. So we saw 3 nice trades. These are all textbook type trades. Okay. Made for $4,300. We saw another nice trade on Billy here. Made another couple grand. We saw another little bit sloppy 3-bar play, but you know, a 3-bar play nonetheless. Made another couple grand. But here's the thing. Large cap stocks can be expensive, right? I took 1,600 shares of Billy. Cost me $127,000. I took 2,500 shares of XPEV. Cost me $111,000. I took 1,400 shares of Merrick, cost me 72 grand. Took 245 shares of Tesla, cost me $220,000. And 800 shares of NVDA, which cost about $185,000. Okay, so the cheapest trade I took during that stretch, those 3 days of trading, was $27,000 in a cash account. Okay, in a margined cash account. Okay. So it would have cost a decent amount of money. The most costly trade, the most expensive trade, okay, would have cost you 55 grand. And that was the Tesla trade. So what's one of the comments that we frequently get? Well, geez, do you guys trade low cap stocks? Do you guys trade low price, low dollar stocks? I get it frequently. And I get it. Newer traders are like, I don't have a 50K account. I don't have a $100,000, $200,000, $300,000 account. Now, most people do have margin, and I'm a fan and a supporter of margin. So in this case, you didn't need a $200,000 account, maybe 50, 100 grand. But note, and it's important to note, these trades were taken with $1,000 risk. That means if they didn't work, I would have lost $1,000. My goal was to win 2-1, and we did happen to win 2-1 on all of those trades except for NVIDIA. So it was pretty significant risk. Most of you will not be starting with $1,000 risk, but this is some of the concerns or issues when you trade large cap stocks like Tesla. Okay, now on the flip side, the Fed, that's Unmol's nickname, the Fed, okay, often, but not always, often trades lower price stocks. So here's a trade that he took on LIDR. I believe this was yesterday. It was a beautiful trade, by the way. And you can find it right here, number 27 on the percentage gainers list. Percentage gainers. It's not some fancy $100, $200 a month scan. You use dollar gainers, percentage gainers, dollar gainers, percentage gainers, right? Well, here it is right down the list. So finding it, I don't want to hear excuses. I didn't know, I couldn't find it. Oh, it's there, right? And this is the gap it had. It gapped up from, I don't know, 450 the previous day and opened right around 550, 525 right here, okay? So right there, it gaps up, takes out this whole area, takes out a lot of red bars, which is good after a climactic pullback, okay? Now, here's the crazy part. John Darby in the chat room is the one who actually shouted this out to Unmol. LIDR long, this is 5 minutes before the market opened, usually kind of thin, but lots of pre-market volume. This is one of the advantages to being in a community of traders, right? When you're in a chat room or a community of traders, you're going to catch ideas that you otherwise wouldn't have caught because, well, let's be honest, you're a human being. You're not going to catch everything. I don't care how good of a scanner you are. You're not perfect. Well, if Unmol didn't catch this or if John hadn't commented on this, Unmol would have made $3,204.78 less yesterday. He would have made $3,200 less yesterday. Okay? But because John shouted it out, he made an extra $3,200. Was it a great pattern? It was. It was a really nice little wedge flag pattern right here. You guys got in at 586. Your stop was 536. It popped, pulled back in, and ripped. Absolutely ripped. All right, and this is where you can see Unmol bought it at 586. That was his call, 586 by 550. I think it would end up being like 556 or 536. He ended up changing this, I think, to a 50-cent stop loss. Okay, but the point is, this is a cheaper stock to buy, right? Let's do it again. How about DIDI? D-I-D-I, okay? Nice gap over this red bar right here with room back up to just over 10 bucks, okay? So stock opens and rips, pulls back, $9 entry, $8.85 on the stop loss. There's another $3,090 on this. Look at that rip. That's ridiculous. It went from 9 to 980 in, I don't know, 30, 45 minutes, whatever it was. The daily was nice, had the triple bottom, gapping over a red bar, topping tail, room to go higher. This is a $9 stock. Let's do it again. All right, let's do it again. What about SoFi? Another $3,090. This is gapping over 2 red bars and room to $18. 17.15 by 16.80. Rip. I mean, it went from 17 to 18.50. There's another $3,000. So let's go to here. Small caps are much less expensive. 2,000 shares on the LIDR trade cost 17 grand. 7,000 shares of XPEV at $9 cost 60 grand. 4,000 of Mara at 52 cost 68 grand. But that's the margined amount, right? The cash required to take the cheapest trade was $4,400. The cash required to take the most expensive, most costly trade was 17 grand. And guys, this is at $1,000 risk. $1,000. Like I said earlier, you're not going to start at $1,000. These trades gave Unmol the same result that I got. In fact, a better result because he was getting 3,000 out of his winners. I was getting 2,000 out of my winners. Now, in fairness, every trade for me that went 2,000 actually went 3,000. But my management's different than Unmol's. Not the point, neither here nor there. He got the same result for much less money. Right? He got the same result for much less money. So I don't want to hear about, oh, it takes a lot of money to make money. It doesn't take a lot of money to make money. But here's the rub. If you don't have a lot of money, you really shouldn't be trading huge amounts of money either. So what if we took all of those trades and brought them down to reality? Reality would be $10 to $100 risk. Because if you have a $2,000, $3,000 account, you're not doing $1,000 risk. You're not betting 30% of your account on one trade. That's insanity. You should never bet more than 1%. You shouldn't ever risk more than 1%. Okay, 2% is really high. So if you took Billy with a $100 risk, it cost you 12 grand. If you took XPEV or Mara or Tesla, this is what it would cost you: 11 grand, 7 grand, 21, 18. So the cheapest trade was $2,700 account. Okay, the most expensive, most costly trade was a $5,400 account, cash, leveraged 4-to-1, if that was a $100 risk. Now let's be frank here. If you had a $5,000 account, $100 risk is 2%. Right? 2% is a pretty big risk level for someone with a $5,000 account. Now, the only time that I find that to be acceptable is if you have more money, but maybe you have an offshore account because maybe you don't trust your offshore broker, so you put 5 or 10 grand in each time. Maybe you got 50 grand. You're like, all right, I'm going to do 5 grand. I'm going to risk 2 or 3% because if I draw it down, I have 40 grand left in a different account because, we can't trust offshore brokers, because they're not FDI insured, they're not SEC regulated, FINRA regulated, etc. But the point simply is, those same trades that I took at $100 risk still would have only cost you $5,400. You don't need a massive account to do that. So if you don't have a large account, should you really be risking $1,000? No. You should be risking 10 to 100 is far more reasonable. Far more reasonable. Okay? And if you don't believe me, maybe you need to rethink whether or not you want to be segmented or you want to be featured on when will the insanity stop. If you think you're too good because, you went to MIT or Harvard or Stanford or Cambridge or Oxford, maybe you might want to rethink that. I'd be happy to feature you on a segment. I'm always looking for more material. But if you don't have a large account, you shouldn't be risking lots of money. To succeed, you first have to last, right? So if we go back to this slide, those are on my trades. If Unmol's trades with $100 risk, let's just go back to his trades and take a zero off, right? Unmol's, this would have cost you $1,700 divided by 4 would have cost you $400 to take that LIDR trade, 200 shares of it, right? It would have cost you a little more than that. Yeah, $1,600, something like that. Right? In cash, it would have cost you about $400. Take this off to a $100 risk. Now it costs $6,000 divided by 4 costs you $1,500 to take XPEV with a $100 risk. Cash. Okay? $68,000. Take a zero off. It's $6,800 divided by 4. It's like $1,700. Cash. So you could have traded all those trades with a $100 risk with like a $2,000 cash account. Okay? You don't want to be on this. So guys, one of the things people get caught up in, all right? One of the things people get caught up in is this. Oh my gosh. Jared last week, dude, that retracement level video you did, it's funny, it's just ironic, purely coincidental. Somebody actually commented in the chat room today, thank you for the retracement video you did last week, it was awesome. Well, it just coincidentally happened to be put in here. Dude, that retracement video was awesome. 50% versus 25% versus 100%. I learned so much from it. And then we sit here and we talk, oh man, my goodness. This lower high, lower high, lower high, lower lows, bottoming tail, minor price support, level 1 price support, level 2 price support, change of color bar, green bar, narrow body bar, check. Useless. It's garbage. It's worthless. It means absolutely, positively nothing. Okay? Oh my goodness, but what do you mean? Jared, this chart's not worthless. This chart's bankable, right? 10 cent stop loss and the thing went 60 cents. That's 6 to 1, my man. This is what multiple concepts in an area look like. Price, volume, moving averages. Worthless. Absolutely useless. It's useless instead of useless. It's useless. Did I do that on all three? No, I didn't. I only did it on that one. It's useless. Okay? Why? Why is it useless? Because if you don't get your money right, it doesn't matter. So what if it's a great chart? What if you're risking too much money on this great chart and this great chart doesn't work? well, then this chart doesn't mean anything to you, because if it stops out, it might wipe out 30 or 40% of your account. So how good is this candlestick? How good is this blue moving average? How good is support if you don't have your money right? Most of you don't have your money right. It's a fact. You don't. Okay? So that leads me to this. A lot of people talk smack about margin. Oh, new traders shouldn't use margin. It's not about margin. It's not about cash. Now, I fully and completely understand that if you use a margin account and you're an idiot, you can owe. And you don't want to owe. Right? You don't want to get a margin call. So I understand the people that say new traders shouldn't use margin accounts. But I have news for you. There's value in margin accounts. They give you more leverage. So if you do have a small account, you can actually take more trades, right? And if you get over $25,000 in your margin account, you can take unlimited trades. Those things are important, right? Being able to take 2 or 3 trades at one time is important. But if you have a $2,000 account and you want to trade Tesla, it might eat up most of your $2,000 account. But if you have a $2,000 account that's leveraged to $8,000, now you can take another trade other than Tesla. Maybe you can take a second or a third trade. So margin is a good thing, as long as you're smart with it. That's the issue here. Most people are just not smart with their money, period. They're not smart with cash. They're not smart with margin. They're just not good with money. But margin isn't the problem. You are the problem, right? It's like the gun comment. Guns aren't the problem. Bad people who own them are the problem. Margin isn't the problem. So the question you got to ask yourself is, do you trust yourself with margin? Because quite frankly, 95% of the day traders I know have margin accounts. And the ones that don't, they're not good traders. Every good trader I know uses a margin account. Why? Because you can maximize profits that way. If you can get 2-to-1, 3-to-1, 4-to-1 leverage, and you use good money management, why wouldn't you want the leverage? I mean, think about it. When you buy your house, you bought your house on margin, didn't you? When you bought your car on margin, didn't you? You did. Now, buying a car on margin is pretty dumb. Payments suck. 5, 6, 7% interest rates are stupid. That's a different topic for a different day. Why most people are broke. 21% credit cards. It's why most people are broke. But you bought your house on margin. Why? Well, probably because you had $50,000 or $100,000 in cash and you didn't want to live in a $50,000 or $100,000 house. You wanted to live in a $300,000 or $400,000 home. So you bought your house on margin. You did. Okay? Point simply is there's nothing wrong with margin when used properly. So if you're the type of person who has an addictive gambler type personality, you might be better off not using a margin account. But for everyone else out there, margin equals increased profits because it allows you to have multiple trades open at the same time, even though you're still only using 1% risk, right? So if you had a $100,000 account, you could do $1,000 risk. Well, you only have $100,000 in buying power. Well, that might be one trade. But if you had $400,000 in buying power, you can still do the 1% risk, but now you can have 2 or 3 trades open at the same time. You make more money, okay? So there's nothing wrong with margin, but the flip side is this. The flip side is stupidity. This is a percentage recovery chart. You don't want to be featured on this. Anywhere on here, really. 5% or 10% is not terrible, but do you see how ugly this gets? How quickly this gets? You see what I'm getting at? You knock off 30%, 35%, you hit 35%. You need a 54% gain just to get back to break even. The bigger hole you dig, the harder it's to get out of. And then what happens? It's typically a spiral, a downward spiral snowball effect. All of a sudden, you just chopped off 30% of your account. Now what do? Instead of lowering your risk, you raise it. I got to get my money back. Clearly, you're not good enough to get it back because you just lost 30%. So now that you just lost 30%, what makes you think you're going to get it back so quickly? We can be honest about it. Ego. The need to be right. Ego. So then you double down. I mean, again, I'm going to go back to it. I'll jump back to it real quickly. How in the world does this happen? How does this shit happen? I messed up with 50K. You messed up. What does that mean? It means I had no plan, I had no money management, and more importantly, I had no effing idea what I was doing. And you did it with Forex too. It's unbelievable. People do it every day. Every single day. Guys, I have a file folder of hundreds, if not thousands, of When Will the Insanity Stop episodes. I can only put out one a week. It's like Prince's music vault. You can only put out and release so many songs. You got thousands left in the vault. That's how many people do this horse shit. So when you go look at this percentage recovery chart, you better take it damn serious. I'm not kidding with you. You dig yourself a hole, and the analogy I typically use is for those of you that play poker. You go all in on your first hand, and it doesn't go right. You're done. You chop somebody's leg off, take half their stack in the first 5 hands, they're done. 9 times out of 10, they're done. They have to work themselves out of such a big hole, it's going to be hard to come back from it. Is it possible? Sure, it's possible. It's just very hard. And then your ego catches up with you, and instead of risking less, you risk more. Right? Right? So the problem is people just aren't smart. And when you start with a small account, you need to be even more careful. Yes? Because you don't have money to replenish your account. So be smarter. You need to be smarter than somebody that has more money. Okay? Follow your plan. Keep losses small. Let your winners run. Stay in control. So what are your choices if you have less than 25 grand? Right? This is the part that you all want to hear about. Okay? What are your choices? Well, you could take 3 trades a week on a 5-day rolling period, right? You could take 3 trades a week. You could do that. Nothing wrong with that. Okay? You could open an offshore and international brokerage. Nothing wrong with it. You're just not going to get any protections for it. I don't even know what the legality of it is, but I know somebody that had about 150 grand in a Forex account offshore. Gone now. They decided to close shop. Took his money. No recourse. Nothing you could do about it. It broke him. He was an okay trader too. So be wise if you're going to do that. Put small amounts of money in, okay? You could join a prop firm, right? It's going to require a license, though, a Series 56, Series 57, Series 7, and the compliance is pretty significant. Yearly training and education. You have to lock your money for 1 year. You have to let them know every time you change your job or every time you change your address. Pass the test, all that good stuff. Oh yeah, and they get to see your other accounts. If you have an IRA or a 401k, they get to peek into those accounts too. Okay? You could open up 2 or 3 smaller accounts. Let's say you have 5 or 10 grand, right? You could open up 3 $2,000 accounts with 6 grand. That gives you 9 trades a week. That's plenty. 2 trades a day, give or take. That's plenty. It's plenty. I took 1 yesterday, 3 today. It's an average of 2 a day, right? So you could open up, this is probably your best bet, right? Open up 2 or 3 smaller accounts. Give yourself, 6 to 10 trades a week, something like that. Okay? I don't know why it says trader. Let's use trades. That's better, Derek. Okay? You could swing trade, right? Longer term trading. You could use a cash account, right, Mark? You could. You could use straight cash. And when you're new, there's really nothing wrong with using a straight cash account. You're absolutely right. Okay? You could also trade options, right? Puts, calls, credit spreads, you name it. Much cheaper. Trade options. You could trade the options on the stock. It's a little harder to day trade options. You can do it. There's nothing wrong with it. You can absolutely do it. A little bit more challenging. There's nuances to it. Okay? But these are pretty much your choices. And then again, we can go down here and go 7, use a cash account. Right? You could do that. Nothing wrong with that. Okay? So these are your choices if you have a small account. I can't really think of anything else other than that. In my opinion, I think cash account, options, or 2 or 3 smaller accounts is your best bet. If you want to swing trade because you have a job and you can't spend an hour a day, in front of the computer, that's fine. I'm okay with that. But that aside, I think open up 2 or 3 smaller accounts with margin, use a cash account or options, spreads, puts, calls, etc. And you know what? It can be done. You can swing in core trade. Here's a great example of Adobe. I commented, I put this out there, in the chat room. Oh, I don't know, it was a few weeks ago now, 3 or 4 weeks ago. If you did a $100 risk, this trade only cost you $1,700. Take a look at it. 586 was the weekly buy setup. Weekly, bottoming tail, doji bar. Your entry's 580, your stop's 550. It's a $34 stop loss. You would buy 3 shares on a $34 stop loss. Right? $34 stop loss, 3 shares is just over $100 risk. It went 2R in 2.5 weeks. It's an 11% return. You could have made $200 on that trade. What about this trade? Now, this one's a little more aggressive because it had not broken out yet, but the entry there was 489. The stop was 468. It's a $21 stop loss. $100 risk was 5 shares, $105 risk. Cost you $2,400. You made $800, a 32% return. Both of those were nice trades. Maybe you sell some up here, maybe you add on the pullback. That's swing and core trading. There's nothing wrong with swing and core trading. Maybe you don't have every day, all day to trade. Okay? What about spreads? Jeff Yates is a credit spread master. All right? These 20 contract trades only required a $10,000 cash account, and 20 contracts is a lot. You'd be up $3,000. Well, what if, right? What if you did 5 contracts? You only need $2,500 now. Did 10 contracts, you only need $5,000 now. Cut it in half, but a $5,000 account would have made you $1,600. And this is in 3 weeks. This is using options, using spreads. These are alternatives to not needing $25,000. What about Unmall? Well, he trades everything. But CTIB, $2 stock. Grom, $4 stock. Prog, $4 stock. Any, $6 stock. HYLN, $7 stock. These are all some of the trades. But note, he's got Facebook puts in here. Right? He's got Tesla puts in here. He made $4,600 on those. I think it was yesterday or the day before. I can't remember. Okay. Here's his trades on Grom, on CITB. Look how much money he made on Grom. Guys, Grom's a $4 stock. Right? 2,400 bucks plus another 1,000. He made like 3,400 bucks on this thing. It's a $4 stock. How much do you think it costs? Not that much money. 1,000 shares, this is 4,000 bucks. You may not make 3,500 on it, but you might make 300 or 400 on it on a $100 risk. So if he made 3,500 and he was risking 1,000, you could have made 350 bucks risking 100. Options on AMAT. How much did that cost him? 130 calls. And you can see he doesn't win every trade. But these are not expensive trades for the most part. Key takeaway, money management and proper trading are far more important than market cap. That's the ultimate thing here. Because honestly, if you're trading $10, $20, $30, $40, $50 risk, you should still be able to trade Tesla. But you can make money on large caps. You can make money on small caps, right? And Unmall does it with everything. And you can see, not every day is a winning day. Here's a losing day over here, right? But there's all kinds of stuff in here. There's puts on the Qs and the SPY, made $6,000 on here, right? There's a trade on Ally, you made $1,800 right there. A trade on JP Morgan, you made $1,100 on here. Some Amazon. I don't know if they're puts, calls, whatever. But the point in is, he's got his hands in a little bit of everything. I mean, I think it was last week the man had 62 open positions. 62 open positions. Expensive stocks, cheap stocks, options, spreads. Go back. Let's go back. You can do any one of these things. Trade a cash account. Trade an option. Open up a few accounts. It's possible for you. But you're not going to get here overnight, right? You're not going to start at $1,000 or $2,000 or $3,000 risk. You're going to start at $10 risk. And you're not going to need a lot of money when you start at $10 risk. But the key is knowing this, right? The key is always money management. It's always money management. Know the expectation, guys. So if you're getting 1-to-1 on your winning trades, well, you better be at least a 50 or 60% batting average trader. I shouldn't even say 50 because break even's not why you're here. You're here to make money. So you better be at least a 60% batting average trader if you're only getting 1-to-1 on your winners. And you're going to take slippage on some of those losers. Tough spot to be in. 2-to-1, well, you better have at least a 40% batting average. Right? Get to 50, you're profitable. You get to 60, you're a rock star. If you're doing 3-to-1, well, note, you don't need to win as often. But, right? But, it's a lot harder to do. Takes more time. You're probably going to need a little more money because you're going to be in more open positions at the same time. 4-to-1, 5-to-1, whoo. You're a unicorn, an alien. Guys, let me give you an example real quick. Now, again, this is only over the last 2 to 3 weeks. I should have put this on the slide. I apologize for not putting this on the slide. My bad. I've been backtesting a lot of different managements over the last 18 months, 2 years. Okay, but I just want to give you just a quick example. You need to understand the expectation, because if you don't, you're going to find yourself in a position where you're uncomfortable. So explain. If you're doing 4-to-1 profit targets or 5-to-1 profit targets, you're going to be in those trades a long time, and a lot of them are going to stop out. A lot of trades are going to stop out. Okay? A lot. But you're going to find balances. So let me give you an example. These are things that you need to backtest for your trade. I'm talking about my trades right now. My trades. Okay? So over the last 3 weeks, 2.5 to be honest with you. It's 2 weeks plus 3 days. Okay? 2 weeks plus 3 days. That's 13 trading days. Okay? 3R all or nothing. All or nothing. All right? Has made 13.3R, including today. Including today. It's made 13.3R on 30 trades. That's pretty good. Why? Because, well, if we do 13.3 divided by, whoopsie, my bad. You have a 0.44 expectancy. That's great. It's really good. For those of you that know what expectancy is, okay? If not, go read Van Tharp, Trade Your Way to Financial Freedom, Super Trader. Great books. A 0.44 expectancy for an intraday trader is wonderful. 13.3R over 30 trades. It's very good. Had about a 32% batting average, okay? Do you know what end of the day hold made? Some of you might because I've been talking about it. Basically, you take the same entry as 3R all or nothing. You use the same stop loss as 3R all or nothing, but this time you sell it at the end of the day right around 345 to 350. You literally hold the stock from whenever you enter and you sell it at the end of the day. It either stops out or you sell it at the end of the day. Trade Your Way to Financial Freedom, Genie by Van K. Tharp. Super Trader by Van K. Tharp. So I'll type it in for you guys. Okay? End of the day hold on 30 trades over 13 trading days. Okay? I don't know today because Microsoft is still open. It's up about 3R here. All right. And Westmacallit is still open also. QS, and that's also up about 3R. Not including today, which is insane because it's probably going to make 7R today. Not including today. ED hold. It's unbelievable to me. Is up 33.45R. And guess what? Here is the kicker. Here's the kick. It has exactly the same batting average as 3R all or nothing. What does that tell us? Every trade that went 3R finished the same or better at the end of the day. Every single trade that did 3R all or nothing that stopped out for end of the day hold. Duh, right? Every trade that did 3R all or nothing that you also did end of the day hold finished better than 3R. 33.45R on 30 trades? That's a $33,000 gain on 30 trades on a $1,000 risk. Okay? So I'm not saying you should go do end of the day hold. I'm not suggesting that at all. I'm saying you need to understand the expectation. Could you imagine doing 3R all or nothing with a 32% batting average, making 13R, being happy about it, and then someone else telling you, yeah, I did end of the day hold. I made 33R with the same batting average. With the same batting average. Crazy. This is what I mean by know your expectation. Do you use different management strategies based on time of the year? No, I don't. No. All right? So guys, there's a lot of ways to do this business, but you need to know the expectation. The expectation when you're new is to suck. Sorry to be so blunt. When you're new, you're paper trading for the first month. Learn your platform. Learn the buttons. Learn the order entry boxes, right? Stop, market, stop, limit, market, good till, cancel. You know what I mean? End of the day, close of the day, whatever. There's tons of different order types. Just learn your platform. Right? Learn how to place a trade. Learn how to place a stop loss. Learn how to place a bracket order, OSO, OCO. Okay? Beginner, real money, small risk. 10 to 25 bucks. Small enough not to get hurt. Yeah, that's too long, Steve. It's too long. You need to feel those emotions. You have to. You got to feel slippage. You got to feel those emotions. I want people to get to real money as quick as possible, but at small risk, $10. Soon as you know how to place a trade, place a stop loss, place a bracket, get into real money trade. You need to feel it. You got to feel it. I've never met a losing paper trader. You ever heard that phrase? I've never met a losing paper trader. It's a common one. Intermediate, you're doing $50, $100 risk. This is when consistency starts to become common. Where you're starting to see multiple months where you're profitable. When you're new, you'll have 2 up months, 2 down months, 2 up months, 2 down months, 3 down months, 3 up months. You'll just be all over the map. When you start to get to the intermediate level and gain consistency, you'll start seeing you're up 3, down 1, up 2, down 1. You'll still have, 3, 4 bad months a year, maybe more. But you're going to start having more good months than bad months, and you'll be net positive. And then you'll get to a professional where you've earned the right to risk as much as you'd like. 1% of capital for retail accounts and 2% for prop accounts. Heck, you can even push it to 2% if you really want. But don't skip any of these steps, because to succeed, you first have to last. Money management's your number one job. You got all these people out there pitching a bunch of horse shit. Yeah, I just made $72,000 yesterday. Yeah, you risked 80% of your account to do it. And now you're dragging all these other fools in that think they're going to copy their way to $72,000 in success because you said so. They don't know how to enter the trade. They don't know how to exit the trade. They don't know what slippage is. They don't know what a spread is. They don't know what a bracket order is. And they don't know that risking 80% of their accounts being stupid. But you drug them into it. You're complicit in their failure. But they don't care because you're paying the subscription, baby. Show me the money. That's all they care about. Don't do it. Go through the process. And did I mention, because I know I did, this will be the hardest thing that you've ever tried in your life? And now you want to skip steps too? Don't. Right? Oh, that's why. So what's realistic? I've shown this slide before. You're not different. Assuming so is very dangerous. Thinking you're better than someone else is always dangerous in life, but really dangerous in trading. Thinking just because you have some experience or you're good at math or you're a patient person doesn't make you any better than someone else. Ask me how I know. Because I worked on Wall Street and I really bought into the dumb money thing. It was like, hey, we work on Wall Street, we're the smart money, and everyone else is the dumb money. And that's not really wrong because there are a lot of dumb people out there. But when I moved into trading, intraday trading, I believed that mantra. I believed because I had experience on the street that I knew better. I didn't. I got slapped around just like anyone who'd never traded before got slapped around. In fact, it probably hurt me. Ego. I came in with a monster ego because I thought I knew better, because I thought I had experience, because I was around the smart money. Don't. It's going to take you 1 to 3 years to get good at this. You know what's the one exception to that? Credit spreads. Jeff Yates has an unbelievable credit spread newsletter that he does. It's incredible. I know because I've been using it for the last 4 months, 3 months, 3.5 months, whatever. Okay? It's very simple. It's very easy to learn. Okay? But there's still a learning curve to it. Doing full options and stocks is going to take you 2 or 3 years to get good at this. Bank on it. It's going to take, I know, you don't have 2 or 3 years. Well, then find something else to do because the market doesn't care what your timeline is. It just is. You'll get it when you get it. Some people will get it in 9 months. Some people will get it in 6 years. Some people will never get it. But it's going to take you a long time. Okay? So be conservative when you plan. Plan for the long haul. It's not a get-rich-quick thing. Right? Very few people in America make $100K a year. It's true. Individually, of course. Number of traders is even lower. They come in undercapitalized, overhyped. And then the market slaps them around. And then they say, oh, that's just gambling. No, you are a gambler. Trading is not gambling. You are a gambler. Okay? And honestly, compared to most other businesses, starting a trading business is actually pretty inexpensive. It's pretty cheap, right? It really is. So just be smart. Be reasonable with your timeline. Be reasonable with your risk level. Use common sense. Be objective. And don't just sit here and say, I know what he's saying is true, but. There is no but. It's like, okay, we've all been here, right? I've been here. I know I need to take this stop right now. But if I take this stop, it'll put me down 4R today. And I don't want to be down 4R. And I know this stock's going to bounce. You don't take the stop loss. You bag hold. And then the stock goes down from 1R to minus 2R. And then you sit there and go, you know what? It's right at support. I'm going to add some shares. Cost average my way down on this, and I'm just sell at break even on the bounce. Bounces a little. You add it, bounces a little. You're like, oh, this is a smart decision. And then it tanks, goes another leg down. Now you're down 3. And now you've added, so it's even more painful. And you're like, well, I can't get out now. I got to see what's the news on this stock. You know what? Let me pull up Yahoo Finance. Oh, they're about to do earnings in a week. Oh, the CEO is announcing a new product tomorrow. I'll hold. What happened? The stock tanked after the product announcement. That's crazy. Jared, here's the email. Jared, what's going on with this particular stock? You know, Jim Cramer said it's supposed to go higher. You know, Maria Bartiromo says this new product is going to change the landscape of the world. The stock keeps going lower. The question in and of itself is wrong. We don't know what the news, how that's going to impact the stock. I mean, guys, Tesla is $1 trillion company. Elon Musk is the richest man in the world by 50 or 60 or 70 billion dollars. They're a junk bond rated company. $1 trillion market cap. Doesn't have to make sense. That's the point. So all you Tesla fans, don't send me emails. I don't have a problem with Tesla. I'm just commenting on facts. It's a junk bond rated company. It's $1 trillion company. Richest man in the world owns it. That's insane. The chart's the chart. The news is the news. We separate them. We trade the reaction to the news, not the news. Get that in your thick freaking skulls. We trade the reaction to the news. We trade the chart. We don't trade the news itself. And if you do, you're going to be a statistic. So use common sense. Be smart with your risk level. There are lots of ways you can trade with a small account. You can use cash. You can open 2 or 3 small accounts. You can use options. You can swing trade. You can trade lower priced, lower cap stocks. They're all available to you. I don't want to hear the money issue ever again, because it's not a money issue. It's just a matter of whether you're good enough issue. And when you're new, the answer is you're not good enough, and that's okay. It's nothing to be upset about. No one's good enough when they start. No one is good enough when they start. You wouldn't throw a middle school kid out there in the NBA. They're not physically developed enough. They're not ready. You've never played golf. You wouldn't go play Tiger Woods. You're not ready. There's no shame in that. Tiger Woods wasn't ready at 10 years old. There's no shame in that. When you're new, you're new. Accept it. Embrace it. Why? Because if you embrace being new, it lowers your expectation, which lowers your stress, which makes you trade better. Be smart. Do this the right way, and it'll be the greatest decision you've ever made. Do it the wrong way, and it'll be the biggest mistake you've ever made. Let me repeat it because it bears repeating. Do it the right way, and this will be the best decision you've ever made. You'll trade from anywhere you want in the world. Unmal is sitting in an Airbnb right now in England. He's from India, lives in America. He's in India, or he's in England on a laptop right now. And we can go back, and he's making this kind of money from a laptop traveling the world at 29 years old. $7,000, $16,000, $6,000. Has some losing days here too. Call your own shots in this world, and you'll be much happier than someone who has to work for the man. But if you think you're going to be able to call your own shots tomorrow or in 6 months, you're sorely mistaken. It's going to take you a long time, but it will be worth it. Just look at it this way. It took you 4 years to graduate college. Then you had to work for the shitty boss that you still work for that won't give you the promotion that you deserve because that person doesn't like you and their best friend got the promotion. And now they're making the money you thought you should be making. And round we go. And I need you to come in on Saturday for those TPS reports. And round we go. Take control back, man, of your life. It's possible. It's not just for other people who are lucky. It's for anyone who wants to put in the time, effort, and discipline. The question is, are you that person? I don't know. Only you can answer that question. So, I hope you guys learned a little bit on what good trades look like. I hope you learned a little bit on how you can get around a small account, the types of trades, the price points you can use, the risk level you should be considering when you start. I hope all of that was helpful and will make you a better trader, because guess what? If you follow those rules, you will be a good trader because you won't blow up your account. You'll start small and you'll work your way up and you'll ultimately become successful. It will take longer than you expect for 99.9% of you. A year from now, you'll say, Jared said 1 to 3 years. It's been 1 year. And I said sometimes it takes 6 years too, and 5 years. It's different for everybody. If you want it, you'll make it happen. If you don't, you won't. All right. Hope you guys enjoyed that lecture. I'm Jared Wesley of Live Traders. We'll get back at it again next week.